Data center name NBIS, ticker NBIS. Stocks had a terrific run, especially right here where they announced a big Microsoft deal. Let's take a look at the long term and see whether money into the company is going to be greater than money out to the shareholders. NBIS currently has a beautiful balance sheet with more cash than debt, but guess what? That is going to change very soon. They just said they are going to issue $3 billion in convertible debt and equity, which is going to change this balance sheet, and we think it's going to go even further than that. Let's take a look at why. So far, NBIS has built exactly one data center in Finland. Microsoft loved it so much, they put it in an order for a whole bunch more. In fact, $17 billion over 5 years, that's $3.5 billion a year. Let's take a look at what's expected in the revenue line. This year, $580 million is expected to jump in 2026 to over $3 billion. That's that Microsoft money coming in. They are building out a data center right now in New Jersey with some of Microsoft's money. If you've been watching our videos and want to invest alongside us,
click the link in the comments, select your brokerage,
search for ticker RVER wherever you buy stocks.
Thank you, and now back to our video.
So although Microsoft has committed to giving them $3.5 billion a year over the next 5 years, you can see that creates a really nice revenue stream, but they have to build all of those data centers out. Look at how much this is going to cost them in CapEx down on this line, and look at the negative free cash flow. Negative $11.5 billion in free cash flow over the next 4 years has to be financed some way, and it's going to be financed by selling debt and equity against you, the current shareholder. So remember that perfect balance sheet of NBIS? Take a look at its competitor CoreWeave, already $13 billion in debt. Their free cash flow for building data centers, even worse than NBIS's are expected to be. This business is not new. It exists in REIT data centers. Think of ticker DLR. It is just bigger, bolder, and faster chips within the same business model. And what happened to that business model? They all ended up becoming REITs. You build these things out, you pay your shareholders a dividends, you borrow money, you issue equity over and over and over again, and you get a small spread. That is likely what is going to happen to both CoreWeave and NBIS over the long run, because we've seen this model before. So a lot of great revenue growth in this story at NBIS, but we are worried that stock and debt issuance to fund the negative free cash flow is going to be so great that the current shareholders are not going to get a great return relative because of all this issuance. Thanks a ton for watching. We really appreciate it. All those likes, subscribes, we really appreciate those. If there's anything you want to see, let us know in the comments.